Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So in the morning call, full version express, I talked about how the S&P cash has held above, 2464-ish or 2470 for 2 weeks. That maybe now, can get going, make new highs because, the last week or two was led by the Dow with select stocks. So can tech wake up and help fuel, the S&P a little bit higher? We also had a lot of earnings reports behind us, a lot of patterns building. So in my note, I tried to go over strategies on how to maybe be in some verse, the earnings pivot, and then how to add to put on another tier, or if you didn't want to be in verse the earnings pivot, get involved when we get some kind of motion above some kind of descending trend line. So today there was actually a lot of good trades. So anyway, let's just get into it. The S&P cash, here is our level. We were above the 21-day pretty much for 2 weeks, perked up here. I did get along some spiders today, a little bit lower. The VTF saw me pick up the spiders, probably 20 cents lower, no big deal. So I'm in it just in case we try and break above this. I tend to not like to be in 6-7 names and the indices, just in case the indices try and trap you to the downside. Some stocks will let you out if they want to trap you indices. They could do that, but I'm pretty long tonight. Anyway, here's when they were trying to break up below the 50-day and couldn't, and this was your descending channel break above, and now we've been going sideways for about 2 weeks, looking like we're going to perk up through that. So a tier 1 in the spiders makes a little bit of sense also. The Qs, which have been a problem, perked up today. Seems as if, it's repaired some of the damage from this outside reversal day. You had this outside reversal, shook the tree. What did it wind up doing? It held the 21-day moving average. And then today, it cleared this spot. So if you've been short the Qs, maybe you covered today when it got above this 143.97, or now that it closed above this 144.50. It's not out of the woods, but, from last week where I was kind of neutral to negative on the Qs, now I'm back to neutral, maybe neutral to positive because, it takes sometimes a week to work this off before it goes again. Last time, you had this big outside day or trend reversal. It took about 6 weeks to make a low, and then we went to highs. Here, it took 3 days. Remember this one? 3 days, and then all of a sudden you're back up to highs going above the moving averages. So here we're back above the 8-day. We held the 21-day, and I'm seeing some decent action in tech. So, I would think if you have a bear on the brain, maybe today at least you get out of the way to wait and see. If we opened up tomorrow and did an outside day again and made a lower high versus that, okay, it's different. But for today, even though the volume's low, it's more neutral to positive than neutral to negative. And I think on on Friday you had a little signal to that could happen. All right, so what were the strategies for today? So I came in long Apple. I talked about Apple on Fast Money last week, saying kind of hold the earnings gap. One day traded a little bit below, got us out, but then got us back in on Thursday, and we've been in ever since. And if you look here at Apple, why did we get out of it? Okay, well, this is why we got out of it. Just for a day, okay, was when it went below this little pivot and stayed below, okay? So then Friday, we bought back, okay, versed that low because now we have a new point of reference, okay? Still held the majority of this entire gap. And then today, some of you guys added when it went above this 157.40, which I did also. I have more Apple tonight than I had, coming in today. And what's the next pivot point? This is your next pivot point. So, people like, what does this mean when you hold a big portion of the earnings gap? Well, what it means is people weren't waiting to buy a dip. Shorts weren't able to press it into cover. And now we're, near the old pivot of all-time highs, 159.75. So to me, I'm trying to stay with this trade. I'm going to always be in a certain amount versus this spot and then try and trade some share size around it to maximize some motion. At this point, it looks really good, and that's Apple. Also mentioned Facebook. Said Facebook, you could be long verse, this earnings pivot, which was right here. So that's tier 1. Or you could just start a trade when it got above 170.55, okay, which it did. And now you could have had a day trade of $1.40, and or you're in a tier 1, tier 2, thinking it gets back towards highs. Or tier 1, tier 2, back to tier 1 overnight, because just in case there's something tomorrow, you don't want to give back today's money because you like to net money. That's what we do. We like to net money as traders, not put it all on the table, get taken off. But anyway, nice little setup. Netflix started off weak, came back up. Some of you guys are long verse this spot right here, or verse the earnings pivot, or looking to get more involved with a move of, what did I say this morning, 182.50. So at this point, being in some Netflix makes some sense. Big earnings gap, held higher versus the gap pivot. It's not really a barn burner right here, but it can go if you think the market's just going to continue. It's in the game. Unfortunately for today, I did not go at Netflix or Facebook. I went after Google, and Google did not work. Not sure why. To me, it looked like it was set up. Obviously, actually, it's the weakest looking stock. I don't know. For some reason, I got a little excited thinking that it would take out this little spot and go $6, $7, and it didn't. So I'm not in it for now. Some of you guys are long versus this spot, and if you added today, you had to get back to what you were just long. Why am I out of it? Because when I went to lunch, or to my meeting, or to Fox Business, I put my stop in at the low of the day, which was 944. So here, okay, just so you could see my rationale. Everyone's like, why? I want to know your rationale. Okay, well, this was the first start of the day. It put in a low here at 944. Okay, bounced off of it, and I said, hey, I'm going to go to Fox Business. I got to go to the gym. I got to do all my things. I'm putting a stop in at the low of the day. Broke the low of the day, got out of it. I didn't get back in it. But we'll see what happens tomorrow. We'll see if it doesn't gap up and it shows some relative strength. Maybe we'll try it again. Amazon did a little bit better. I did buy a little Amazon. Okay, it's not showing anything special, but I don't know. I always have like a little FOMO in Amazon where I'm in fear of missing out. Well, here's your outside day. It's in here now. Could trade into these moving averages. It doesn't look great, but we'll see. NVIDIA, woohoo, nice surprise. Remember we talked about the pre-earnings run above 170? Well, everyone's like, oh, it's a double top on Friday. I'm like, no. It just went from 164 to 170. Maybe you couldn't trade through it. Maybe the option gods didn't want it above it, so look at it today. So today I got long at around 168.5 and traded it a few times and went out long it, and now it's above its all-time high. Earnings are until Thursday, so it has some time to go. Above the 21-day, first time here. From there, it couldn't get through. Today, got through. It looks good. Great little setup, guys. Okay, this is the gift that keeps on giving. Here was your last earnings gap up. Remember that one? You had a nice little trade post earnings high, and then it's been above the 8-day until this outside day, and then got a little choppy, into the tech correction. But now, definitely a good radar stock, and a lot of the best stocks out there are all having pre-earnings runs. And here is your semi-pre-earnings run in the video. If it gaps up tomorrow, I'll trim some. If it gets downgraded because people are worried about earnings, then it is what it is. But the good book says something closed at all-time highs. If it had earnings tomorrow, would I take it home? Probably not. But since there's earnings on Thursday, I'm going to give it a little space. And then you had Tesla. Tesla we had overnight because we bought it on Friday when it cleared 350. It was a little bit of a consolidation day. Some of you guys sold it up a few bucks. Some of you guys bought it down a few bucks. I traded a little bit, and I still have a little bit on. It definitely needs a little time. It needs to, a little time to now go sideways and prove it could hold above here. Maybe a few more inside days and goes again. This was the setup last week. Gapped up after earnings. Took out the post-earnings high, which is always a trade if people are caught short. Why would they be caught short? Because big gap up, going sideways. They couldn't press it in the gap. Boom. So now we'll see if it can go sideways again and go. No real setup, but I'm going to have a little bit on just to keep me really engaged with Tesla, because I love when Tesla trades through levels. It's a lot cleaner and it could pay you. It's now back above every moving average here versus when it broke below it, there, or below it here. So it's kind of repaired. Now it just needs some time, and you have to have better setups. The banks, I'm still in Bank of America from last week. Goldman Sachs, I missed that trade. When I remember I was at the beach in Long Branch, it got me good on earnings, but whatever. Now all of a sudden, nobody, no trader wants to trade it because everyone got hurt right here. and now, boom, it cleared this spot, and looks like it can continue up towards what I said in the full version of the morning call, up to this 240. It's above all the moving averages. It's going to go without me. I'm hoping, I went with Bank of America. I would think Bank of America, could get back towards this 2580. Just doesn't really trade well, so you have to own it versus the level, and there's a bit of a void here, above this to 26, and it's just got to let the moving averages catch up. Last time it became a cleaner trade was right here when it broke above what people were calling the right shoulder of a Head and Shoulders pattern that blew out a long time ago, and now we'll see if it can continue. That's really it, guys. Listen, just so you know, if you read the bottom of the recap that you're watching, T3 made a decision to put the Morning Call Express and the recap into Redler All Access. So if you want information about that, there's the information. And it's not going to happen until September 5th. And if you also call up, they'll talk to you about other alternatives on how to watch me. I apologize if you've been watching this for a decade and you're used to it. There are some executive decisions that have been made to put this behind the firewall, and there are ways for you to continue to get it. It's going to change. So with that said, I hope you're having a great summer. You're navigating these markets well, and keep using your resources. And don't fall asleep behind the wheel with the VIX at a historical low and volume low. But doesn't mean you could just get short and roll it up because those guys are getting blown out of water. Look for setups, not tops, and keep to your process. Have a great day or night. Sorry.